So welcome back. I'm Ted Thomas, and I've been involved in investments for the past 60 years. I spent the last 30 years being involved with tax lien certificates and tax deeds. So you're really going to enjoy this. So welcome back, and we're going to talk about conventional wisdom, and then we're going to talk about some alternative investments. So conventional wisdom is, what are you going to do? Well, a lot of people say, I'm going to buy stocks and I'm going to buy bonds. There's nothing wrong with that because that's what most people think about. So I'm going to talk a little bit about that. I'm not negative on it, but I'm going to talk about alternative investments, which basically is you're going to make the decision on what you want to invest in. Now, is there a lot of things to invest money in? That's for sure. It seems it's the American way to find something new all the time. So I found something that's very old, so it works for me, but I'll tell you about both sides of it so you kind of have a little idea of what's going on. So conventional wisdom is this. Investors in the past would say, buy stocks and buy bonds. All right, so according to the experts, over a long period of time, stocks will pay you basically 70% or so. Now, of course, that assumes that the market doesn't have a crash. All right, so that's one type of investment. Seems to be pretty popular. You can hear about that on radio and television and news reports every single day of the week. All right, then there's other investments called bonds. All right, so I'm not negative on either one of these. Now, stocks can be risky because the markets go up and down. All right, so if you're a young person, you might want to do that. However, bonds, they're more stable. So what happens with bonds? Well, basically, bonds are going to produce 4 or 5% interest to you. Now, what does that mean? That means you're going to invest the money, you're going to get a 4 or 5% return. All right, they pay less, but it's consistent. You know what you're going to make. So if you bought a 10-year bond, you're going to make 4 or 5% each year on the bond. However, what if inflation raises its ugly head? Well, if that happens, you could easily have 4 or 5% inflation. Now, what happens if you have 4 or 5% inflation and you're making 4 or 5%? Guess what? You're going to be losing money. So you don't like that. All right, so the stocks can go up and down. The bonds, you could be sensitive to inflation, and you'll notice they change price every day. When you do have inflation, it's not so easy to make money. All right, so I like to talk about alternative investments. All right, now what is that? Well, there's a lot of different alternative investments. For example, gold. Some people like to have gold. Some people like to have the bullion. They hold on to gold bullion. Other people want to have just physical gold, like in maybe gold coins. Other people want to have gold stocks. Other people want to buy in gold mines. Now, the same sequence of events I just said happens with the silver. All right, so I'm not negative on those. Other people want to talk about land. They say, well, they're not building any more of that, so buy land. Now, could you buy residential land they're going to build on? Could you buy agricultural? Could you buy land that has trees on it? All right, so you're getting the idea. These are alternative investment. All right, now the financial wizards, when they're helping you, they have to charge you for that. So you could have investment advisors, you could have brokers, you could have appraisers, you could have gurus, you could have attorneys. All of them are going to be getting a piece of what you're earning. So if you look at the poll here, I've got them all on there. Cash, bonds, stocks, property, gold, whatever. They're all there, so I don't know which one you want. So I decided I wanted an investment where I could look at it and know I could instantly make money. So originally I spent many years in real estate, and when I bought the real estate, I knew I had to wait for the rents to go up or for the inflation to go up, and it would take me a number of years to make money. So that was a marathon. Nothing wrong with a marathon if you're conservative and you don't finance too much. But 30 years ago, I discovered a program that was sponsored by the local counties. And that program was, they're going to take over properties that people don't pay the taxes. All right, now this was certainly an alternative investment. Now, part of that alternative was this. What are you doing about risk-reward ratio? Well, if you bought tax lien certificates, the reward is high, risk is very low. Very low risk if you're buying tax lien certificates. Now, you could also buy tax defaulted property. Now, there's a little bit more risk there, but the rewards are even higher. So you need to start thinking about that. Where are you? Where are you on the scale? So I was looking for a program that I could make big money. By that I mean I could buy it at 30 cents on the dollar and I could sell it for 75 or 90 cents on the dollar. Okay, now, when you talk about alternative investment, you're not going to find a lot of hoopla unless it's gold and silver, because I always talk about massive profits and all that. But how much gold and silver are you going to carry on your back to do something? You're going to have a place to store it. That's going to cost money. People are going to try and steal it from you. I don't know what's going to happen. But I know not a risk-free investment, but it is risk-free from the standpoint of losing a lot of money. Most people don't lose very much money buying gold or silver. However, what are you going to do if you have to move it? What are you going to have to do if you have to store it? Something to think about. All right, so I'm looking for an alternative investment that's not going to be on television every night and not everyone's going to be involved. It probably isn't rocket ships going to the moon. It probably doesn't have any batteries running it. And it probably isn't something that's got a lot of hoopla around it. I just want to buy into something that I can make steady profits on. So 30 years ago, I learned about an investment that I could buy for 10 cents, 20 cents, 30 cents on the dollar, and then maybe I could resell it almost instantly for 50 cents, 75, even 90 cents on the dollar. Now, what was that? Well, that was basically an alternative investment called tax defaulted properties. All right. Now, most people that are investing already have a little gray hair and they already have a flock of kids. So they don't want to get into too many things where they're worried about it. Although the majority of them will use an investment that's called stocks and bonds. Now, the stock market goes up and down, but when it's on the uptick, everybody loves it. When it's on the downtick, they are really sick about what's going on. All right, the bond market is just about the stable market because you're going to buy and know you're going to get a fixed rate of return. Very similar thing happens with mutual funds. All right, so that's conventional investing. I'm not talking about that. I'm talking about a business that ordinary people can learn how to do it, and when they learn how to do it, they can do it for the rest of their life. It definitely requires that you get off your rusty dusty. You're going to have to do a little work. Now, what do I mean by that? Well, it's going to be not like picking up the phone and calling a broker. This means you're going to have to do some work. You're going to have to do some research on it. You're going to have to look and see, is the value really there? Can I really buy it for a good price and so on? So this requires a little more of your effort. However, now you're going to be able to control your destiny. So don't fool yourself. Don't fool yourself that you're going to buy a stock. It's a public offering. It's an initial public offering, and you're going to buy it, and you're suddenly going to be like one of those people on Facebook or Google that you hear about. They bought into this stock, and suddenly they're multimillionaires or even billionaires. So we got a lot of billionaires now that are under 40 years old. And you read about those people, and I'm not suggesting that they didn't do it, and I'm not suggesting that it's a bad thing. But for most of us, we're better off in a nitty-gritty business where when it's done correctly, you make huge margins of profit. So what business am I talking about? I'm talking about a business that's got great margins of profit. So I like to buy at tax defaulted auction because I'm going to buy for 10, 20, 30 cents on the dollar, and I'm hoping I can sell it for 50, 75, or 80 cents on the dollar. I don't try and get 100 because I want to sell it quickly. So that you're getting the idea. So conventional wisdom says, let's follow these investment advisors and what they want to do. Financial planners are going to help you. Brokers are going to help you. Registered reps are going to help you. Attorneys are going to help you. They're all getting a piece of the action. So when you buy into the conventional market, you're going to pay a lot of people. I'm not negative on it, but I want to get into a market where I can control my own destiny and I can buy something and then I can turn around and resell it and make money almost instantly. Because I can look at it and say, it's worth more than that. So I can look at a tax defaulted property and say, I can sell it for X. If I can look at it and I can sell it for X, then I'll get some margin. All right, that's instant profit. Margin's going to happen right now. So if you want to buy and you don't have margin, you're going to have to wait for appreciation. You're going to have to wait for inflation. And I don't know what else you're going to have to wait for. But I can tell you, nationwide, wow, 3,000 counties are going to sell these properties. It's an alternative investment. 1,400 municipalities are going to sell these properties. It's an alternative investment. It's got nothing to do with stocks, nothing to do with bonds. You're not going to find very many brokers are involved in it. You're not going to find a lot of attorneys involved in it. You're not going to find a lot of investment advisors. Why? Because this is a market you have to think it out. So what really happens is the people don't pay their tax. The treasurer ultimately says, we're levying tax. We're trying to collect the tax. And if you don't pay it, we're going to confiscate the property. Well, if they confiscate the property, they will have done that, and they will have issued notices of default. They'll let the people know that they're doing all that. And when they finally put that property up for auction, the county doesn't want it, so they're going to sell it 10, 20, 30 cents on the dollar. I've even paid for big houses, I've even paid 40 cents on the dollar. But if it was a $400,000 house and I paid 40 cents on the dollar, I had a lot of margin. And that's what I'm after. I'm after margin. And I can see the margin before I put up the money. So that means I'm buying properties 60, 70, 80% discounts below the market. Now, folks, I know that sounds too good to be true, but this is going on 5,000 auctions every single year. There's going to be 5,000 auctions where they want to sell these properties for just the back taxes. All right, what if you could do it online? You could buy these properties online and resell them online. What if you could get them for 10 or 20 cents on the dollar? Now, if you get a property for 10, 20, 30 cents on the dollar and you sell it for 60 or 80 cents on the dollar, well, you're doing pretty darn good. All right, so this is happening every single day. Now, is every auction perfect? Forget it, folks. They're not all perfect. Some of the properties are just going to have junk. But when you buy at the auction, there's no mortgage on the property. That means the mortgage or the trust deed loan is wiped out. So when you buy at that auction for 20 or 30 cents on the dollar, there's going to be no mortgage and there's going to be no deed or trust loan. You've got a tremendous upside. So what are you buying? You're trying to buy margin. If you can buy margin, you're really on your way. Now, you're going to be able to get every deal, a big one or a little one? No, there's no magic about this. It's a government-controlled and mandated system. It's not like a mutual fund. It's not like a stock. If something's worth a lot of money, you'll be able to appraise it. The tax collector will do that. Or if you want to buy one for just $1,000, you can look and say, well, I'm going to buy it for $1,000. It's worth 10. Well, there's going to be all sizes and shapes at these auctions, and there's going to be 5,000 of these auctions. Now, how do you know about them? Well, they're going to put them in the newspaper. They're going to put them online. They're going to have auctions on the courthouse steps. You can go there and watch the auction so you don't spend any money, and you can do them online. There's literally dozens of sites, everything from bid for assets to realauction.com. There's tons of properties coming up for sale, happening every single day. So think about what I'm going to say here now. I'm talking about an alternative investment where I'm going to try to get the property for about 20 cents on the dollar. But what if it was worth $100,000? Now I've only invested 20. So could I sell it for 60 or 80? Well, if I look at it and I sell it, I can sell it for 60,000. I can buy it for 20. That's a nice margin. I'll work on that business all day long. What have I done? I've got myself out of the risk business. I can evaluate it myself. I can control my own destiny because I'm buying it low and I'm selling it low. Why am I doing that? Because I don't want to wait and wait and wait. So my clients are not going to be young people. My clients are going to be 45 to 105. Now, why are they 45? Because these people have money. When we go to the auction, we're paying cash. And why do we pay cash? Because no bank is going to touch these properties. And a majority of investors don't even know about it. So there's going to be a very limited amount of people that are going to lend money on it. The point is, I'm buying low and I'm selling low. So I'm acting just like the big stores that you know about. What does Walmart do? What does Target do? What does Costco do? They buy it low and they sell it low. Now listen, my name is Ted Thomas, and right below me there's a free gift. And if you're going to go to those auctions, there's two mistakes I want you to avoid. Mistake number one is don't ever buy a property unless you've seen it. If you don't have boots on the ground or someone that you know has boots on the ground, forget it, because what if it burned down? What if there was a hurricane? All right, you don't want to take that risk. All right, the other thing you want to be careful of at the auction is don't try to win the auction. Try to be the lowest price that you can. You don't want to be the winner and start bidding against someone else and the prices go up. When the price goes up, what happens? That's going to take all the profit out of the deal. Again, I'm Ted Thomas. Right below me is a free gift. You want to sign up and get it.